Okay, thank you so much, everybody, and welcome back. I hope that you were able to enjoy a tea and coffee break and network with each other. So we have a really great panel discussion that is planned titled Revolutionizing Financial Systems, which will be moderated by George Cao. Our panel will include Kevin Yedid-Botton, Paul Wong, as well as Eric Vreeland. So please help me in giving each of our speaker and panelists a warm welcome.
Thank you, everyone. It's a pleasure for us to come here and talk about a very exciting topic, CeFi and DeFi. Before we start, why don't every one of us give everyone a brief introduction about yourself? Eric, do you want to go first?
Yeah, absolutely. I'm Eric Vreeland. I am the Chief Strategy Officer at Polyhedra Network. We are a zero-knowledge infrastructure company with a focus on interoperability and scalability.
Hello, everyone. Our company is PSC Trading. We're based in Hong Kong. We do some trading work. We have two strategies. One is arbitrage. This is quantitative and coding strategy, and the other is discretional strategy. And we have the Type 9 license in Hong Kong, and we have run over 5 years. Thank you.
Hello, everyone. Thanks for being here. My name is Kevin. I am a partner of Parify Capital, one of the leading crypto funds in the space. We run fundamental, quantitative, and venture strategy in the space. And particularly, I spend most of my time in the quantitative side of the business.
Thank you. My name is George Cao. I'm the founder of Max Square Fund, a US-based hedge fund focused on crypto and technology stocks. Thank you, everyone. So all four of us coming from different places. Eric from North Carolina, Paul come from Hong Kong, Eric come from San Diego, and I come from New York City. It's a perfect example of decentralized setup, right? As we see, the crypto market keeps its own evolution, and right now there are a lot of talks about the CeFi and DeFi. The first question I want to ask is, someone may argue CeFi and DeFi complementing each other. Someone would say they are competing with each other. So what do you see? Do you think these two ecosystems can coexist, and which one is dominant? Eric, do you want to go first?
Sure, yeah. I don't think necessarily that it's a winner-take-all market. I think that there are advantages to, or perceived advantages maybe to centralized finance, and there are things that individuals and entities like about DeFi. I think each one is kind of preferred for certain tasks, and so recently there have been some significant failures in centralized finance that have kind of driven people to maybe lose a little bit of trust in the centralized finance system. At the same time, the kind of DeFi side of things is really nascent and still very new, and there have been significant hacks on the DeFi side of things too, but at the same time there is this kind of transparency and enthusiasm that's coming with this new system. So I think we're starting to see increased interest in what is possible on DeFi, but I don't think it's going to be a swift change from CeFi to DeFi. I think there's going to be a very extended period of time where kind of both are going to be used for different purposes.
Thank you, Eric. Kevin, so I know Parify manage over 1 billion of assets, so I'm sure you guys are big in both CeFi and DeFi. So how do you view this question?
Yeah, maybe a question for the audience, which is, what has been, DeFi is all about composability and tokenization. What do you guys think has been like the biggest tokenization event of crypto so far? Like anyone, give it like an answer, if anyone has an idea. Yeah. Okay, maybe. Well, I'll tell you what I'm thinking, and those are the ETFs. So we always joke that crypto is meant to tokenize real-world assets, but for the first time, actually, you saw the real-world and traditional finance tokenize digital assets, primarily Bitcoin. And the results of that have been amazing. We've seen the fastest growing ETFs in the history of ETFs. Just this week, the IBEAT ETF exceeded $30 billion in AUM, which is something that's really staggering. So from my perspective, I really, the answer kind of comes down to like, where is the puck going? And where the puck's going is that back in 2017, 2015, 2018, 2019, it was all about DeFi because that's where crypto existed. It didn't exist in the traditional CeFi world. But what's happened over the past few years with institutionalization of the asset class, particularly after the FTX collapse, is that you've seen a lot more activity, demand, buying, trading, instruments, move over from the DeFi world into the CeFi world. And there's reasons for that, whether it's regulatory, capital advantages, liquidity, flow, more instruments that are pointing towards CeFi. So if you ask me in a very simple answer, I think that the tide is going to continue to move towards CeFi and traditional finance instead of DeFi. And I can go into more detail, but I want to give us the opportunity to answer.
Yeah, no, I mean, I just have a kind of a counterpoint to that. And I don't know the answer to this, but is the amount of volume going through ETFs, how does that stack up against the amount of volume for stable coins and tokenized, dollar-denominated assets?
Yeah, so I think like the last 30-day, last time I looked at it a couple weeks ago, 30-day trailing stablecoin balance unadjusted, which is removing some of the recurring transactions, was about $1 trillion on chain. I think if you look at most ETFs today, they're doing about $500 million to slightly over $1 billion in daily trading volume, depending on the day. So it's far exceeding the overall kind of transaction volume. But I think kind of like you kind of have to take a step back and ask the question, where is the money going? Like follow the money. And what we're seeing as an institution that is regulated by the SEC is we are seeing more and more funds, more and more investments, more and more counterparties decide to not use DeFi because it doesn't check the box from a regulatory standpoint. That is the most important thing. And obviously there's certain, Eric, you mentioned to this, like there's been some left tail hacks that have taken place. I don't know who saw, there was the Radiant Capital hack recently that drained $50 million by incorrectly signing a transaction. So if you're an institution and you're trying to grow your business and you kind of have to disclose to your investors that there's this left tail risk that you may be hacked by a nation state, or you can completely kind of just live in a centralized exchange, then you may be choosing the latter versus the former.
It's very interesting that both Kevin and Eric touched some of the very interesting topic, security and regulation. Before we go into this topic, I want to ask one very simple question to Paul. In terms of investment opportunity, do you think these high return investment opportunity exists in CeFi or DeFi based on your asset management experience?
Okay, I think it depends on liquidity. As George Cao told me, and the liquidity is very important in this circle. It is easy for newbies to go on board in CeFi, but DeFi has its own advantages. The first advantage is the DeFi can have no KYC, and no one can limit you to transaction. And DeFi, you transact in smart contract, and it is more fair and transparent. And DeFi's asset is still on your address. So if your address is stable and fair, and no one can touch your address. So I think this is DeFi's three advantages. But the most beneficial for users to use DeFi is that you can make profit. You can farming, you can staking, You can provide liquidity to get your asset have a great amount to enhance your the amount. So it's different from CeFi. CeFi, every CeFi traditional, they want to take money from your transaction deal, every transaction deal. The custodian, the broker, the dealer, the traditional institutions, they want to make profit. So this is a big difference. But the liquid, you should switch from DeFi to CeFi. It's a long term. After time goes, I think it will happen. But it also needs the DeFi have a more solid infrastructure and high speed transaction and safety and so on. So
that's a very interesting observation. So we all know the blockchain industry starts from people who doesn't want a central bank, who love decentralized. And that's why we start off this industry. And a lot of money flow into this industry. And right now, like Kevin says, people are switching from DeFi to CeFi because of the strong regulation. It seems like there is a reverse of the trend. People want more regulation. So Kevin, how do you explain this observation?
I don't know who saw this week, Michael Saylor call out anyone that self-custodies Bitcoin a CryptoPunk. And obviously he got a lot of backlash for saying that because he was in some ways defamating those that are using self-custody. Obviously he's one of the largest single holders of Bitcoin and he doesn't self-custody. So take that for what it's worth. But on your question of regulation, look, I don't think it's something that people want regulation. I think, naturally, given the option, I think most people would choose less regulation. But like for example, I'll give you an example. Like we are an SEC registered investment advisor, and the SEC has this rule where if you hold a meaningful part of your funds in a non-qualified custodian, and meaningful, it's kind of up to their discretion. There's not like a set number. They can come and fine you and tell you that you're improperly custodying funds. So that naturally creates a incentive, perverted incentive, you may say, for people to keep funds in qualified custodians and keep them away from decentralized finance. There's been many instances where we would want to be using our funds in decentralized finance, but because of whether it's for staking or lending or borrowing or trading, but because of the regulations imposed by the SEC, at least for the US participants, our funds actually have to be in a qualified custodian and not be able to move.
Makes sense. I think you said something very important there. You said that like the substantial amount is up to their discretion. And I think that I don't think people necessarily want more regulation. I think they want more regulatory clarity. And they want to be able to know, what I am allowed to do, what I'm not allowed to do, and how I can follow the rules, and not get in trouble for this and invest in what I want to invest in without having to worry about the ambiguous nature of a lot of the things that happen in crypto. More than just actually, people generally don't want more regulation in most cases.
Thanks, Eric. I mean, in the recent years, we start seeing the regulators start turning these eyes into DEX and other DeFi things. So how do you think things will look like in a few years? Do you think DeFi and decentralized exchange will face as strong regulation as the CeFi or centralized exchange, or do you think by nature DeFi is always light regulated? It's a question for anyone. Yeah.
Yeah. So at least in Ethereum, for example, you have OFAC, the Office of Foreign Asset Controls, blacklisting certain addresses that belong to illicit finance or terrorist organizations or sanctioned countries. So if you are an institution or an investor that basically wants to avoid doing business with someone that may be a terrorist or something, you're going to be careful about using decentralized finance, because unless you have the right systems in place to prevent you and alert you from trafficking with some of those blacklisted addresses, then you may be in trouble. So I think DeFi is already being regulated. You've seen the SEC. You know, DeFi is not something that just exists and then no one controls. There's ultimately people that are building the code. You saw it with Tornado Cash, where a developer is facing prison time for developing money laundering technology. So just because you're building on DeFi doesn't actually mean that you're in some ways immune to the pressures of regulation and regulatory pressures. And what you're seeing is you're actually seeing more and more protocols release features that are compliant with regulations, whether it's geofencing via VPNs, or whether it's not listing certain assets that are deemed securities, or preventing certain assets that have been blacklisted. In fact, if you're an Ethereum validator today, I don't know if people know this, but about 1/3 of all transactions on Ethereum are OFAC monitored, meaning validators that are decentralized and fully permissionlessly, like no one's telling them to do this, they're doing this on their own, for their own well-being in some ways, are choosing to run relayers that scan for OFAC transactions. So I think the because people are realizing that if you're not complying with the law, similar to like shadow banking, you're not gonna get the big money. So they're complying, and you're seeing those models evolve.
Yeah, makes a lot of sense.
Yeah, I just want to add one thing. I think that when most people think about DeFi today, they think about a lot of these kind of consumer-facing applications, because that's what exists for the most part. Most DeFi usage is kind of consumer-facing. I think we're going to maybe in the interim or start to see very purpose-built, like institutional DeFi products that are regulatory, compliant, easily auditable, have these geofencing capabilities, and that might be a trend where we start to think about institutional DeFi as a separate category from just kind of DeFi holistically.
You know, we're in some ways we've already seen that to some extent. Like you've seen protocols like Maple, for example, that are on-chain but are KYC'd, whitelisted, only kind of facing to institutions that kind of go through their traditional onboarding. You're seeing that with like Superstate, with Securitize, with many companies that are effectively building hybrid DeFi models that are KYC'd. But part of my struggle, and we see this at ParaFi, is it's like, what are the benefits? In many ways, we kind of feel like we get the worst of both worlds. We get the risks of DeFi, meaning like we have the risk of some foreign country hacking the smart contracts and draining everything, with the liability and onboarding and legal complexities of a traditional counterparty. So why even touch DeFi when you can just avoid that and have very similar experience? So I think this is a reckoning that the industry is going to have to go through. If like you can't just take something that is DeFi and just put a wall garden around it and call it now KYC institutional DeFi, because it defeats the purpose. It's no longer DeFi. It's no longer decentralized. It's no longer permissionless. And I don't think people have quite figured out what the right model is going to look like on that sense.
So Paul, based on your experience, do you think one is, as you have operated a regulated fund in Hong Kong, do you think you have problems of investing DeFi or traded with DeFi venues just because of regulatory concern?
Yes, if you use centralized exchange to trade, it is very important for regulation to trade, because if it is no regulation, the old money, the big amount of money they don't have the comfortable to trade in the exchange. So regulation is important, but in DeFi's world, I think the regulation should be less. If the regulation is too much, the innovation may stop by the regulation. So this is my point.
Yeah, it's very similar to Kevin's point. If you have a choice, you don't want to regulate it, right? So, and just out of curiosity, do you think, Kevin, do you think because the liquidity of centralized exchange is much better than DeFi, but do you think DeFi, I would say, venues price discovery is less efficient, meaning there are strong alpha over there and lots of investment arbitrage opportunity over there?
2 years ago, I would say yes. DeFi had very strong, like pre-FTX, pre-Genesis, pre-Luna. I think DeFi and CeFi were very comparable to one another in terms of trading activity, price parity. I think today DeFi has fallen behind. I mean, you see it on the charts. Just overall volumes are down, overall TVL is down, overall listings are down. So, and the game has moved to the centralized world. You know, I've kind of outlined a number of reasons. But ultimately, I think people are still using DeFi because it allows you to do things that you're not being able to do in CeFi. Like DeFi is the Wild West, and people like that. You saw that with like Pump.fun, where people are just launching meme coins and trading those. That's not something that you can do in, you know, you cannot call Coinbase Brian Armstrong and say, hey, launch, you know, some meme coin. But you can do that in a permissionless system. So I think DeFi will continue to cater to a vast number of users, but it's probably not, but it will still stay somewhat niche in that forefront, while the big playing field continues to evolve towards CeFi and traditional markets.
Thanks. Do you think security would be one of the biggest concerns if you want to, play with DeFi?
100%. I can't stress this enough. We have investors that if you tell them that you're touching DeFi, they walk away because they don't want to underwrite the risk of being, having cake on their face and being the fund that got hacked because some smart contract got hacked. Like nothing that you did wrong, but just by nature of being in DeFi, it's more risky. So I think you're not getting paid to take risks on DeFi for the time being, and for that reason, I think people are choosing to be more on CeFi and traditional exchanges.
Definitely, I believe both in CeFi and DeFi, cybersecurity is always one of the most concern that everyone has. Eric, I know Parahedra did a lot of things on that, so you always manage on-chain liquidity, so on and so forth. So do you want to give us some thoughts from your side?
Yeah, no, I think security and is going to be a big reason that people choose not to interact with DeFi. I think most of the I think we are seeing progress, and I think even though we see hacks, on a monthly basis, it's way better than 2-3 years ago. The amounts are going down. I think we're making large improvements. At the same time, hackers are getting more sophisticated. But I do think a lot of the hacks that we're seeing, they're for the most part, a lot of times they're social engineering attacks. They're rarely smart contract hacks. They are like, hacking into someone's computer. These risks also exist in centralized finance. It's just that those entities have been around for a long time. They have security teams. They have like protocols in place for making sure that everyone uses appropriate, VPNing into the network and using YubiKeys and things like that. That we're just, in general, it's a nascent industry, and we haven't gotten to the maturity where these types of systems and processes are put in place. I wasn't around, 100 years ago, but I've watched a lot of Western movies. Like banks used to get robbed all the time, and we fixed that problem. Like banks became more secure. They evolved, and people trust them now. So like we are 10 years into DeFi. I think we're making progress, and I think it's going to get better. But for the time being, you have to price that risk appropriately.
Yeah. I just out of curiosity, how many people here has ever got hacked? I'll raise my hand. Not proudly, but unfortunately, quite a few people. Yeah, it was very frustrating to see your asset was stolen by a hacker, and FBI couldn't do anything. They kept it away. It's very frustrating. So I'm pretty sure there's a lot of things we need to improve in terms, both in CeFi and DeFi, to help our improve our cybersecurity and making sure investors' assets are safe. But in terms of trend, I've seen recently in the past 1 year or two, I've seen a lot of CeFi has starting to incorporate some of the DeFi features into their products, right? For example, some of the, I would say, fund invest in both CeFi and DeFi. Some of the exchange even offer DeFi products. So I guess my question is, do you believe this is a trend moving forward? So CeFi and DeFi will, I would say, integrate more into each other and offer a more comprehensive financial product to the users, or it's the other way? Whoever wants to go first.
I'm happy to take it. Larry Fink was on Bloomberg a few weeks ago, and early this summer, and he said that his goal is to tokenize every asset that BlackRock has, and that's like close to like $10 trillion in assets. He says every asset will not just be a legal document in some database in some bank. It will be every QSIP will be a smart contract. It will be each token. So again, like to me, it's very clear that blockchain and tokenization and smart contracts are going to they're not going anywhere. They're going to become more embedded into the traditional financial system. The question to me is how open those will be. Will they be, even if they are in an open system, is that something that BlackRock has control over, for example? Or is that something that's going to be run in Ethereum or Solana that no one has control over it? That I think that's still an open-ended question, and some critics of that may say, well, that's just a database, right? That's not blockchain, that's not crypto. Crypto needs to be decentralized. So I don't think we have gotten to the point from a regulatory standpoint, really, and regulatory clarity for an institution like BlackRock to make the decision. Now, the counter argument to what I just said is that you have seen certain institutions, like for example KKR, that have chosen to adopt networks like Avalanche for large tokenization and securitization projects, or Hamilton Lane. These are traditional private equity institutions choosing public blockchain. So in some ways, it does seem to be that the audience is kind of catering towards public blockchains, but there's still, I think there's still some work to do on that front.
Got you. Paul, what's your view on this question?
In recent 2 years, the word RWA is more and more popular. RWA means real world asset. I think it's a hybrid models, and it's a bridge for both retails and institutions to have some connection. And it has 3 advantages. One is for retails, you can see more transparent because of the blockchain technology. You can see more transparent some product. You can buy some product. And for institutions, you can provide some customers financial product because of tokenization. It is more convenient. And for both, it can provide the liquidity. If you don't want to hold the asset, you can sell in the trading market. So I think the RWA is a very good product for both sides. And I think it's a more and more popular hybrid models in the future.
Thank you. So Eric, what do you think of this question?
Yeah, no, I mean, I agree with all those points. I think we've seen kind of traditional finance go back and forth on the private chain, permission chains versus public chains. I think right now we're seeing much more openness to public chains, but I think we could see the pendulum swing back the other way. I think the advantages are, transparency, composability, and just speed of transacting makes for a more efficient experience. But I think we have, what we have to overcome is like, are these benefits available while still, following the regulatory and rules that we need to follow?
But what do you think is the biggest blocker for, I would say, traditional people entering into crypto institutions? For example, I would say back in 6 years ago, back in 2018, when I first entered this industry, there's still people talking about blockchain is a Ponzi scheme, Bitcoin is a Ponzi scheme. You don't see people talking about Bitcoin as a Ponzi scheme anymore because people get used to its existence. But still, there's a lot of resistance when I talk to, I would say, old money, for example, a real estate company, and trying to get them invest in crypto. they were just like, I know nothing about it. What is it? Explain to me in 2 minutes. I do have difficulty to explain everything to them in 2 minutes because they may overheard words from here and there. They keep asking these questions that probably take me 5 minutes to explain. So what do you think is the biggest blocker for each of you to, I would say, educate people from traditional institution? And what do you think in 3 to 5 years, do you think the institution adoption of crypto will be more popular or vice versa? Kevin, yes.
I kind of think there's like two kinds of people in the world, which is like the first type are people that that look at crypto, look at Bitcoin, look at Ethereum, look at smart contracts, and say, I get it. Okay, like I have a need for it, or even if it's not addressing me, I understand that the role. And there's some people, and that's totally fine, that they just don't get it because they don't identify with it, they don't have a use case for it, they not care about the things that the people that care for it do. So I had very smart people have this discussion with them, very successful finance people, and some people just refuse to get it, and they're like, I don't get it, it makes no sense to me. But I don't think I don't think that necessarily that diminishes by any means the importance of the role that assets are playing today. You said something that I think is interesting, which is, the biggest friction to crypto today really comes down to use case and UX. So what I mean by that, and UX, I'm not just meaning from like a technical standpoint, it's about a user experience in the literal and philosophical way. Like, what is the user experience that somebody wants when they purchase Bitcoin? Are they looking for fiat debasement? Are they looking to trade it? If you're a trader at Millennium and you want Bitcoin, well, you want to be able to trade it from your JP Morgan and Goldman Sachs account. You don't want to go into DeFi to trade, Bitcoin or Ethereum. And if you're just a normal user and you want to use an application like prediction markets or stablecoins, what are the barriers to entry that you have to that? So in many ways, I actually think that it's all about experience, and I do find it interesting that the two, typically when there is a set of buzzwords like AI and crypto, the answers kind of like run away. But I actually think that AI is playing a very important role in the crypto landscape, because the LLMs nowadays, the large language models like the chatbox, the chat GTPs of the world, are actually simplifying the barriers to entry for many people. I actually predict that most of the activity, over 90% of all blockchain activity, will probably be AI agent driven, not human driven. And that will kind of look something like me just texting my bot saying, I want to bet $10,000 on the presidential election market. And my LLM bot will go ahead and put together the transactions, sign the smart contracts, and I will just say approve with Face ID, versus like trying to actually figure out how to bridge money across all these things. So I think that the interface is accelerating rapidly, and the fact that you now have the ability to have exposure to Bitcoin without facing a crypto native exchange, it's massively and rapidly accelerating the amount of people that would be adopting Bitcoin, and you're seeing that in the numbers every day.
So you're saying just make it easier for normal people who doesn't have a strong technology background to enter into the crypto market is the key, I'll say, milestone for get wider adoption for the crypto.
On the technology part, absolutely. On the human experience side, even though that may seem a little bit softer, I really can't understate enough how game-changing the ETFs are, because it went from making this asset class completely inaccessible, out of sight, out of mind for millions of traders, to all of a sudden being right on their screen with an additional ticker that they can just pull up and click buy or sell. And that is the type of experience that you want. Crypto needs to get in front and center of people's screens for it to be adopted more and more.
I totally agree with Kevin's point. of course, there are two types of people. There are more than two types of people. The ones who love crypto and the one refuse to love crypto. And also there are more people sitting in the middle. So the world is more than just Republican Democrats, right? We have more independents. So, I mean, Eric, what do you think? What kind of things can we do to help those independents to get more involved in the crypto? Kevin believes that technology-wise, the UX-wise will play a very important role. Do you agree with him?
I think the UX needs to get easier to use, for sure. But I think even before that, I think that the narrative needs to improve as well. Like right now, and just the value that crypto brings. Because to us, I think it matters that it is decentralized, that it's censorship resistant, that it's permissionless. But I don't think to most people, they care about that yet. And people don't care to learn about proof of work versus proof of stake and all these details that a lot of people in the room probably care about. And a lot of people probably aren't going to take the time to understand it, but guess what? A lot of people don't take the time to understand how AI works, but a lot of people see the value in AI because they can go to chatgpt.com, they can type a question in, and then they can get an answer to that question, and it is an immediate aha moment. And we don't have that yet in the crypto space. We don't have okay, I get that this is some sort of digital asset, but why is it valuable? And in certain countries where there is rampant inflation, we see increased usage in stablecoins because they have a problem that it actually solves. But in the US, what problem is crypto actually solving? And I don't think we've done a good job communicating what that is.
Makes a lot of sense. So we definitely want to find more use case for the crypto technology. So I mean, I think Kevin makes a very nice point saying we need to make it easier for people to use crypto. So I'll use myself as an example. I'm a computer science PhD, right? But it took me a few hours to figure out how to use a decentralized wallet. And unfortunately, I lost the wallet access. So some of my assets stuck there. I don't think I can ever recover. But there are people like, who is not technology-friendly people like I am. Even I paid a lot of tuition for use a decentralized thing. I'm sure lots of people experience the same thing. How many of you has lost your access to your cold wallet? I mean, how many Bitcoin? Yeah, exactly. How many Bitcoin are never retrievable? It's a large amount of assets. So if we can solve this problem, I think the crypto will become more friendly to people like my mom, my parents, right? So I think that's a big step forward. And also find more use cases is very important. So Paul, from your experience, I know you operate a very successful hedge fund. So what is the major block for you to pitch to those, I would say, traditional institutions? And what is the thing that they decide not to invest? And
I think it is not easy to use the crypto in now because the environment is not friendly in many places. So it is a long way to find the ways to use crypto. But yeah, but the crypto, if you in the other side you think it is a asset to fight for the inflation, a financial asset. This is Bitcoin's. I think it is in my view, it is more like a financial asset. We can use to fight the inflation.
Thank you. So we've talked about a lot of problems we have in CeFi and DeFi world, but one thing we cannot deny is the crypto industry has become so much better than it was a few years ago. So we've seen so many people, it's widely adopted, and Bitcoin just hit all-time high yesterday. It's all very exciting. So there are tons of new projects who TGE or to start up. So if you were to start a new project these days, what do you see the opportunities are? What type of project do you think of you want to do? I know it's a tough question if it's an open-ended question, but it kind of can help a lot of us to identify where the opportunity is.
I think most crypto projects today have to start where the demand already is. They can kind of go out and try to figure out a new area where demand will come because crypto is already struggling. So most protocols in crypto are struggling with demand. There's a few things that we know work in crypto. Stablecoins, tokenization, prediction markets, and some borrowing and lending protocols and trading on chain. That's kind of about it.
It seems like it's all financial related projects.
Yeah, for the most part, and you're starting to see some breakthroughs on Deepin, for example, but by and large, they are financial. I like to say like the INGs of finance: trading, saving, lending, borrowing, insuring, etc. So tokenizing, and I think there's strong product market fit. To me, it kind of goes, so you kind of have to do it in that sense, and then say what in those specific verticals where the demand is already present and they've already proven that those verticals have staying power, what can I do to make them better? I think there's a number of things, starting whether it's from like UX, technology, adoption, and integrations. Like, we still don't have a true native, mobile native interface to interact with blockchains. You still have to go through wallets. You still don't have it on your Face ID with Apple Wallet. There's a lot of things that comes to the UX, and the fact that you have the biggest improvement in AI in over 3 decades, it probably makes sense to be incorporating AI with the existing consumer applications.
Thank you, Kevin. So I think I share the similar view with Kevin. It's probably just because both of us coming from the traditional finance. So in my opinion, there are only several types of project can survive through bear to bull circle. So for example, centralized exchange, centralized finance, lending, borrowing, all projects that has a positive cash flow, plus some crypto native projects. For example, some of the chain and some of the layer 2 projects. And all the previous things you see, for example, you GameFi or even now AI-related things, I don't think they have really experienced a huge, I would say, bull market expansion because of the use case problem like Eric mentioned. But however, based on my background, I think my view could be limited. So Eric, where do you think the new opportunities are? If you want to start a new project or you want to give advice to a new entrepreneur, so what do you want to say?
Yeah, so I guess if I had to pick, what advice to give to an entrepreneur, I would say to start with a very niche problem that you think you can make order of magnitude improvement in the experience. And so I think that there's some areas that Kevin identified where we might be able to do that on the UX side. And I think it starts with, what your skill set is and what your team's skill set is. And think about that before you kind of pick the area you're going to build a product in. As far as, what I think is exciting personally, I mean, we are at the AIxWeb3 conference. So I really also do think that, AI agents and crypto go together very well. And I like the idea of, enabling an AI agent with a crypto wallet and having it go, telling it, hey, their Taylor Swift concert tickets go on sale on Friday. Make sure that you get me, the best tickets available right when they go on sale, and enabling it to do that by giving it access to cryptocurrency. So I think, that would be something that was exciting to me is figuring out how to enable AI agents to do more things by giving them access to financial, products and via the blockchain.
What about that there is a Taylor Swift concert going on? Let's issue a Taylor Swift Mimi token, and the AI will do the thing for you. So Paul, based on your experience for your fund, if you want to invest in a new sector, or your fund will invest in a new sector, where do you think the opportunities are?
I think I will not invest in new sectors. I will just hold the Bitcoin, just like gold. You can see the gold price this year, and I think Bitcoin is a good asset can replace the gold, and the price is also very good recently. It will have a new high price maybe soon. But I think next year there is many tough situations. Maybe the former president may be elected next year, and he will start the tariff war, and the inflation may begin come back. And if the Middle East have some not peace situation, the oil price, the energy price will also get a high price. So we should think which asset can fight for inflation, come back, if that happen. I think Bitcoin is. And the other things is if the new policies, you cut the tax from for the big tech company, and it may cause the deficit and the U.S. Treasury enhancement. So it's not a good signal. So sometimes I think in this world, it's not a very peaceful and stable environment. We should hold some asset to fight for to fight for the inflation and to keep to have a good life. And we also can cooperate with some DeFi protocols to stake our Bitcoin to get some more profit. This is, I think.
Thank you, thank you. Because of the time limitation, I have one final quick question for every one of you. So if you have a magic finger, you can touch it, you can change one thing in DeFi world right now to make it so much better. What is it? I'll probably go by myself. If I can make, register in different wallet without remember all those 24 secret word, and if I can connect, just one click, I can register all single different decentralized exchange or centralized exchange. I think it will make the world so much better. It becomes so easier for me. It's like the UX thing you mentioned, Kevin. So other than that, what do you think? If you want to change something right now to make it better, what that would be?
It comes down to security. It would be making smart contracts not exploitable.
Thank you. That's very important. Paul, what do you think if you want to change something?
I don't know. Maybe.
Change the Bitcoin price. Make it tenfold.
But I think I want to change Ethereum's price.
Now I can see what you're holding. Eric, what's your view?
Yeah, I think similar to yours, I think it would be, enabling users to interact with any blockchain that they want without having to worry and about moving funds between chains, or even kind of obfuscating this whole chain interaction completely from the end user.
Totally agree. Thank you very much. Thank you very much, everyone. It's a very interesting conversation. And thank you, everyone.